Good morning. Welcome to Stock Market Today. It's Wednesday, February 5th, 2020, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to ChaikinAnalytics.com/today. Sign up for a free email where we get a lot of the content for this show, as well as give you daily stock ideas to consider. It hits your inbox every trading day before the market opened. So U.S. equities finished higher on Tuesday, posting their best day since August. Tech, industrials, and consumer discretionary led, while utilities and energy underperformed. Treasuries weakened with the curve steepening. The dollar was stronger versus the yen and the euro. Gold was down 1.7%. WTI crude fell 1%, closing below $50 a barrel for the first time since January 2019. So again, your outperformers: tech, industrials, discretionary, add materials to the list. Utilities, energy, staples, and comm services lagged, utilities being the only group to finish lower on the day. And as we get to the desk this morning, we get some follow through to the upside. S&P futures are up 80 basis points. Asian markets were higher overnight, with China and Japan both up over 1%. European markets are seeing good gains. Treasuries are weaker across the curve. Dollar is stronger against the yen and euro. Gold is trading roughly flat, and WTI crude is seeing a rebound here, up 2.2% in the early going. Taking a look now at the S&P 500, we stage a large rally from key support. Remember, we've been highlighting the support zone between 3,200 and 3,250. We pulled back into that support zone, and what we had been saying, what we wanted to see on a pullback was for the RSI to hold bullish ranges, and so far that does remain the case, right? The RSI did not get below 40, so it maintained its position in bullish ranges on that pullback to support, which so far has held up. Now, resistance in the 3,300 to 3,330 range, and with futures trading higher today, we're likely to test that upside resistance from the recent highs. Chaikin money flow remains bullish. So our indicators line up with the price trend. We've kind of been giving you the playbook, right? We were saying all along, any pullbacks, we wanted to see it hold support with RSI holding bullish ranges. So that was it, right? Headlines aside, right? If you had a playbook coming in, you were well prepared for taking action here over the past couple of days. We continue to say the best course of action is to focus on leading stocks and leading areas of the market when those stocks become oversold. Our market in a minute, right? Let's talk about what we're writing in our note today. Stocks rally led by tech and industrials. Oil closes below 50 for the first time in more than a year. Sentiment becomes less greedy, actually easing off some of the overly bullish readings that we had been talking about over the past few weeks. Momentum, the momentum factor and its ETF begins to outperform, and as we said, futures do point to a higher open here today. So after yesterday's strong rally, let's take a look at what happened with the power bars for the major indices. The Dow adds 1.43%, and the power bar shifts back to bullish. 8 bullish or very bullish stocks for 7 bearish or very bearish stocks. S&P 500, 1.5% to the upside, 125 to 81 bulls to bears there. Big outperformance on the part of the NASDAQ, led by hardware names and semiconductors, 2.25%. 32 to 4 bulls to bears for the NASDAQ. Small caps were an inline performer, up 1.5% in line with the S&P 500. 469 bulls, 264 bears. Bonds downtick, sending yields higher. And then, as we said, tech was your leader, up 2.62% yesterday. 28 bullish stocks in the technology sector for 5 bearish or very bearish stocks. According to the Chaikin Power Bar, small cap stocks and large cap stocks remain bullish. Major markets away from here are mixed. Hitting our stock of the day now, E-Trade Financial. ETFC is the ticker symbol. Remember, the stock of the day is auto-generated based on this power gauge rating, and I analyze it for you here in real time. Closed at 43.47, up 2.9% yesterday. Power gauge rating for E-Trade is very bullish due to very attractive financial metrics, very positive expert activity, strong earnings performance, and does have some weak price volume activity of late, as you can see the stock pulling back here. So we have a very bullish stock that is still in a strong trend above the trend line and in a strong industry group. Capital markets have been strong. Stock is currently oversold. Money flow has been mostly bullish, but a slight dip into the bearish side here. And let's call it an inline to slight underperformer of late. This really is kind of a neutral one for me. I will kind of, in full disclosure, tell you that I own E-Trade in my in a personal account of mine. So we have a very bullish rating an inline performer, oversold, mixed money flow, kind of holding support. For me, I don't necessarily think that this is the best spot to get involved right now, and I'm saying that as a holder of the stock. What I like to see is better relative strength. Now, I'm willing to keep an eye on it here. Obviously, I manage my risk, but I want to see a leading stock. I want to see a bullish or very bullish stock outperforming the market become oversold with bullish money flow before taking action. So I think E-Trade is worth adding to a bullish watch list. Maybe give some time to see if this relative strength can improve. Now, what I will say is we want to watch rates pretty closely here as well. Obviously, they have a big impact on the financials as a group. So if rates can stabilize and begin to move higher, we should see E-Trade start to move higher as well. Notice that E-Trade rallied starting in October, right? After the big gap lower following zero commissions, E-Trade actually started to rally in October as rates moved higher. So continue to queue off of rates for ideas within the financial sector. Turning now to our sector tracker. Movement of the major sectors over the last 5 days. Discretionary's had a good move of late, up 2.5% over the past 5 days of trading. Technology, right? Biggest weight in the S&P 500. We say it a lot. We'd love to see that towards the top of the list. Materials, this rally in materials looks to be counter trend in nature. Materials is still a bearish ETF. The XLB has a bearish ETF power gauge rating here at Chaikin Analytics. Financials coming on a little bit of late. Staples, industrials, and utilities are middle of the road. Your underperformers or your groups that are down over the last 5 days, real estate, healthcare, comms, and there's energy, a perpetual bottom dweller, it seems, towards the bottom of the list. Energy, the XLE, has a very bearish Chaikin Power Gauge ETF rating. So we've been saying it for some time. Still don't see any reason to go bottom fishing in the energy complex just yet. Just a group we want to continue to avoid. There are plenty of stronger groups that are outperforming the market where you can go looking for long ideas. No need to go bottom fishing in the energy complex as far as we are concerned. Now, our industry in focus today is a group that's been interesting to us of late. Over the past 6 months, healthcare equipment and services, XHE, the ticker on the ETF, has underperformed the S&P 500 by 4.25%. However, there is potential for an improvement here as the power bar ratio is strong. 12 bullish or very bullish stocks for 8 bearish or very bearish stocks. It's currently ranked number 11 of 21 subsectors, and some of the indicative names there that might be worth taking a look at and doing some further analysis. Integer Holdings, ITGR, Zimmer Biomet, ZBH, and Orasure, OSUR. Integer has a very bullish rating. ZBH and Orasure have bullish ratings here at Chaikin Analytics. And if we take a look at the structure of the fund here, bullish rating, strong trend above that rising long-term trend line. The fund is oversold. Now, from a performance standpoint, it's kind of an inline performer, neither leading nor lagging at this stage of the game. But look at this bullish money flow here, right? The group does appear to be under accumulation. Now, you've heard me say for the past few days that we would expect the healthcare sector and its industry groups to be volatile leading up to the election. But the weight of the evidence actually supports potential outperformance on the part of healthcare equipment, XHE. So if you're an ETF trader, it might be an interesting opportunity here on this pullback and rebound. If you're looking for individual ideas within the group, you have 12 bullish or very bullish stocks that you can start to dig in on and do further work. But I do think healthcare equipment is an interesting in the area of the market for investors to be focused currently, right? Bullish rating, strong trend, solid money flow, currently oversold. That's an intriguing combination as far as I'm concerned. Let's look at what's trending. Yesterday's S&P 500 movers and shakers are gainers and losers. Albemarle, ALB up nearly 12%. Didn't see anything company specific there. Do note that the stock caught a downgrade today at Robert Baird. TXT, there was a Wall Street Journal report that they are buying a business unit. That sent that stock higher by nearly 10%. RL earnings out up 9%. eBay was actually approached by ICE, the parent company of the New York Stock Exchange, for some potential, maybe some M&A. That sent eBay up 8.78%. L Brands was initiated at BMO. Was actually initiated with a market perform rating, but the stock went higher by 6.06% on the day yesterday. Loser side of the board, ICE. down by nearly 7.5% following news that they had approached eBay. Gartner, IT, down 6% following their earnings announcement. COP, earnings announcement, sent that stock lower, but I really think it was their commentary as it relates to demand going forward. Stock lower by 4.5%. HIG, earnings sent that stock lower by 4%, and TSCO, didn't see anything company specific on the news front there to take 3.5% out of that stock on the day. So let's dive into the charts now. Taking a look at sentiment, right? And what I think has happened here is the coronavirus eased bullish sentiment, right? A lot of headlines, potential scary implications of what it could mean for the global economy. But remember, for the past few weeks, now we weren't here last week, but leading up to that, we had been talking about the overly bullish sentiment here. We were looking at the 13-day moving average of the CBOE equity options put call ratio, and notice that it got down to some really depressed levels, right below the levels that we saw back in January, February 2018. And we were saying that, if there was one thing that concerned us within the marketplace, it was the fact that sentiment seemed to be getting a little overly bullish, a little frothy, if you will. Well, the headlines and the potential impacts of coronavirus have actually helped to ease that quite a bit. Are we still much more bullish than bearish from a sentiment standpoint? Absolutely, right? We're not up here near the overly fearful levels, but we have eased off those really, really frothy measures over the past couple of weeks. Same goes for the VIX, right? We've had a spike in the VIX. Remember, the VIX was back down here at about a 12 handle. We've subsequently spiked back up to about the 16 level as the market kind of consolidated and pulled back a little bit. But what's interesting to me is looking at how quickly and how sharply sentiment reversed, and the market didn't even pull back 5%, right? That's just, to me, that goes to show you that there are a lot of investors out there that have a quick sell trigger, if you will, right? The first whiff of trouble, they want to start to protect, or they want to start to take some profits. And to me, that's an opportunity, right? I think sentiment is very much emotional, and that's why we highlight those key levels for the market. And that's why we continue to focus on the areas of the market that are outperforming, because I think if you have a game plan going in, you're less likely to have your emotions take over and get whipped around by the prevailing sentiment of the day. That's why we watch it constantly. We write about it every Wednesday. We talk to you about it here. So sentiment by no means super bearish, but we've come off those really exuberant levels that we've seen over the past couple of weeks. Now, crude oil breaks below $50. Take a look at this chart of crude oil. Now, we tried to rally and just couldn't get any upside traction, right? Now we've broken this uptrend line to the downside and actually cracked $50 a barrel for the first time in over a year. Notice how deeply oversold the RSI has become as we've pulled back, and it really kind of, with the exception of this quick one up thrust to the upside here, RSI has not really been able to become overbought and stay overbought. It has not been able to maintain a position in bullish ranges. So continued weakness here on the part of crude oil as we break down through support and close below 50, and that's obviously weighed on energy. Here's XLE breaking through support. There's your metrics according to Chaikin Analytics for XLE. Very bearish rating, 18 bearish or very bearish stocks as holdings within the XLE for 0, count them 0, bullish or very bullish stocks. This is why we continue to maintain our view that it is not time to go bottom fishing in the energy complex. Finally, we'll wrap it up with momentum. New highs for momentum. What we're taking a look at here is the MTUM, the iShares MSCI Momentum Factor ETF, right? Consolidation, break to new highs, solidly above the 200-day moving average. Notice the RSI series of higher lows as it maintains a position in bullish ranges. Now, what this looks like to me, this little consolidation worked off this overbought condition for the RSI. We're subsequently rebounding after maintaining a position in bullish ranges. And notice the breakout here on a relative basis. We're starting to see outperformance on the part of momentum. Very bullish ETF rating, 26 to 17 on the bull to bear ratio. I think it makes sense to go looking at some of these 26 stocks for potential opportunities. And the way that you can do that is to take us for a free test drive 14-day trial to Chaikin Analytics. Head over to chaikinanalytics.com/test drive to sign up. I hope you have a great Wednesday. I will be back here tomorrow.